first and foremost, finance is very good on spreadsheets. Operations is very bad on PowerPoints and spreadsheets. Operations is about people and it's about process. And you only really can deal with one when you understand the other.
This episode was brought to you by Unify. Download Unify's free IVF conversion and revenue calculator at unify.com/IVF patient retention. Today's advertiser helped make the production and delivery of this episode possible for free to you. But the themes expressed by the guests do not necessarily reflect the views of Inside Reproductive Health, nor of the advertiser. The advertiser does not have editorial control over the content of this episode, and the guest's appearance is not an endorsement of the advertiser.
Redundancy. Is it time to start laying off some of your fertility center staff? Or is it time to hire more because you need duplication in order to positively impact their performance management? This is just one of the topics that I cover with my guest, Dave Burford, today. Dave Burford is the CEO of CARE Fertility. That might sound familiar to you because we recently had their chief scientific officer, Allison Campbell, on the show to talk about embryologists owning equity and fertility clinics taking equity in startups. You should listen to that episode if either of those two topics interest you. And you may have read an Inside Reproductive Health article a couple months ago about how CARE Fertility recently made an acquisition in the United States, in North Carolina, because with their financing from Nordic Capital, they're expanding beyond the UK and Ireland into Europe, into the United States, and possibly other parts of the world. Dave and I talk about the convergence and divergence of the financial and operations divisions of a fertility center. I press him for examples of when something can look good or bad in a financial model, but then have good or bad consequences in operations. When Dave took over as CEO of CARE some years back, he said that there were examples of operations that served the clinic but not the patients, and I asked him for specific examples in patient intake and in call center reception and scheduling. And then I pressed Dave a bit because there are examples where staff needs are at odds with patient needs, and the trade-off has to be solved for. I asked Dave to describe CARE Fertility's human resources machine because with 1,200 employees, I asked him to talk about the balance between efficiency and profitability, and on the other side, overlap and duplication so that you can support your team and support performance management, support the advancement of employees. I asked because this is something I've really been working on as a business owner very deeply for the last 6 months, and it's funny to have someone from the United Kingdom on because layoffs in the UK are called redundancy. Someone who is laid off is redundant. And I observe this tension where you might want to have efficiency and profitability and only have a certain staffing ratio. But if you lose someone, that puts a tremendous stress on the staff. It makes it harder to hold people accountable because they end up having to do other people's work. So it's a lot harder to hold them accountable for their original outcomes. It's harder to advance them. It's easier to burn them out. It's harder to get rid of a cancer when a cancer comes into the organization. And worse, the cancer has bone-dry tinder to set ablaze because the rest of the workforce is burnt out and not supported and doesn't feel like they have the autonomy and doesn't feel like they're able to grow in their careers. So we spend some time on that topic, and then Dave gives examples where he has to pitch to the board or pitch to investors reasons for making certain investments that will be good in the mid and long term, but don't necessarily look great in the next quarter. I ask him what data he uses to make those arguments. I then ask him to talk about the balance of when you start something new and you test the concept versus how much needs to be invested in and built ahead of time so that the deliverable is positive. I asked Dave, now that we're starting to see the original CEOs of many fertility groups, who in many cases were physicians, start to retire and they're being replaced by CEOs who were not the founders of those clinic companies and who very often are not physicians. They come with a business background. How temporary or not should these new CEOs be? Should they be around for a really long time? Should we expect to see a revolving door of them? Are they going to be a symptom of cutting fertility clinics to the bone and selling them at a higher profit, and that churn just repeats? Finally, we part with Dave's thoughts on what he perceives to be the cons of a more process-driven sale in the United States than in the UK and Europe. I ask him if he feels that it is more process-driven in the UK and Europe, why that is the case in his view, and if it is true, what makes it a bad thing. Please enjoy this episode with Dave Burford. Mr. Burford, Dave, welcome to Inside Reproductive Health.
Oh, hi, thanks for having me.
You're now the second leader of the CARE Fertility leadership team that I've had on the show. Recently, your colleague, Dr. Campbell, had joined me, and that was a very popular episode because we did a little more content for the lab folks than we usually do, and they were very interested in her talking about the career path for embryologists. There's a whole lot of places we could begin our conversation today with you being a CEO of such a large group, but one that I'm thinking of is probably germane to many people that are at a point where the founding physicians, the founding CEOs, or the earlier CEOs are starting to retire, and now CEOs from the next generation that are taking over. And that seems to have been your case. It seems that you worked for CARE at a higher level for many years and then became the CEO in 2018. Is that right?
That's right. Prior to that, I was the CFO, and then I moved into the CEO role. For a short period of time, I did both the operations director role and the finance director role, and then moved into being the CEO in 2018. So I've had a kind of broad view of fertility and wearing a few different hats, but obviously a very different experience than somebody that has been a clinician or an embryologist.
Sure. That broad view I want to talk about, if that is how much of an advantage that is in taking over an organization at the top, being able to see it from different vantage points. But to make sure that I've got my history right, was Professor Fischel, was he the original CEO?
That's right. Yeah, he founded the business and was the CEO for since 1996, right the way up to 2015, and then there was a short period of another chap that was the CEO, and then me from 2018.
Okay, so you're the third CEO total in the company's history.
That's right.
And so, did you know that you were was this a track that you were interested in from the beginning? It looks like you started with the company in 2014. Was that in the finance role?
That's right. So prior to this role, I was at KPMG, so I'm an accountant by background, and was looking to get a real job, if you like, outside of accounting, and moved into CARE Fertility, not knowing a whole lot about IVF, but knowing that CARE was a respected, good business in the Nottingham area, and it was a job that I was very happy to get, and then really progressed through finance into operations, mirroring the challenges of the business, I think. So the financial challenges of an IVF clinic or a small group as it was then are not that big, but the operational challenges were quite significant. And so my role morphed into operations, which then set me up quite nicely for being the CEO when that role became available.
Had you thought about that from the very beginning? Did you know that you wanted to be on a track for CEO leadership, whether it be at CARE or some other company?
I mean, I was ambitious insofar as I wanted to go as far as my career would take me, but I wouldn't say I set out to be the CEO. I set out to really understand business. My passion is really understanding what makes a business tick. How can you improve it? How can you take it forward? And that tends to be operational improvements. And so it became clear that my finance role would only take me so far. And if I really wanted to change the way that the business was performing, I needed to move more into operations. And that naturally led then on to being CEO, because you get a really good grounding, particularly if the business is private equity backed. You get a really good grounding in both the finances and in the operations. And really that's the making there of a kind of corporate CEO, if you like.
It sounds like it was a smooth transition from finance to operations, but in my view, it seems like more of a jump. So what kind of transition was it? How did you go from a financial role to an operations role?
It was really mirroring the challenges that the business was facing at the time. We've always been a really successful So we've been going for 25 years, and we've always been a very successful clinical business. So very strong success rates, really good clinical innovation, as I'm sure you heard from Alison when she was with you. But the challenges of the business were that the founders were extremely good doctors and embryologists and good business people. But the challenges of running a multi-site operation are different to that of running an individual clinic. And we had increased competition in the UK, and some of our operational processes needed improvement. And rather than just being a finance director that was happy to throw a few stones, shall I say, at my director colleagues saying, why don't you do this? Why don't you do that? I was very happy to roll my sleeves up and get involved. And I really enjoyed that side of the role. The ops director that we had at the time was looking to move on. And so it became a natural progression. And I did both roles for a short period of time, the CFO and the COO role. And then that became unsustainable, and we recruited in replacements for me, really, to allow me to move on to the CEO role. But it was really reflecting the challenges of the business and my passions, really, for operational improvement.
Well, your passion maybe came from wanting to throw stones, but them saying back to you, yeah, well, if you think it's so easy, buddy, why don't you come over here and try it? And you said, okay, maybe I will.
It's funny you should say that, Griffin, because we actually had a board meeting where the private equity investor at the time was not very happy with some of the operational performance in London, and said exactly that, what you've just said to me. Well, if you can do better than Dave, why don't you do that? And so I said, okay, I'll do a month's secondment to London to improve London's performance. And that really was the audition for being the ops director, or the COO as it was at the time. So it's yeah, that was exactly what happened.
Well, there's a lot to dig into here, because one of the biggest criticisms about so much external finance entering this field of medicine is that there is a financial pressure and sometimes an oversight on operational quality. There's operational improvements to be made for days in this field. There's no shortage of those, but there is also the reality that there is a way of looking at things where it can be just looked at from a spreadsheet without the consideration of actually making the operational improvements. And you had to at least experience some of the other side. So what were a few of the surprises that awaited you?
I think first and foremost, finance is very good on spreadsheets. Operations is very bad on PowerPoints and spreadsheets. Operations is about people, and it's about process, and you only really can deal with one when you understand the other. And so if I take us back to CARE's challenges at the time, it was very much around a business that was geared up to serve the clinic rather than the patients. And that's okay when you've got a lot of demand and not much supply. But when that dynamic changes slightly, and you've got more competition in town, and you've got other people that are doing things in a more dynamic way, and actually the challenge is bringing in supply or patients, then you've got to change your processes to adapt to that. And you've got to be more patient friendly, and you've got to be more adaptive and fluid in the way that you deal with things. And so you can only really do that by talking to the people on the ground, talking to the staff, understanding what their challenges are, and then adapting the processes to meet the demands of patients and the needs of staff. So it was, for me, it was nice to get away from the laptop and the PC, and to actually talk to people and understand what is it that is the challenge here. And that's best supported by a bit of data, if I'm honest, as well, because sometimes anecdotal conversations only take you so far, and you need to have a bit of skepticism about what you hear. And then you need to look at the data and say, well, actually, look, we've got 1,000 people calling us at 7 o'clock at night. You're telling me that patients don't have a demand for late night calls, but why have I got 1,000? Why have I got 1,000 people ringing me when the lines are closed? And it's just tweaking then some of those operational processes to meet those needs. Generally not that challenging, but involved. Yeah.
You mentioned that at the time there was some things that were serving the clinic, but not the patients. What were examples of that?
So, people set up processes often to meet the needs of either themselves or at the time, the needs of patients or customers. But things change and it takes sometimes longer for processes to change. So a good example of that were it's really important for our doctors in this field to understand the medical history of patients so that they can give the patient the most informed consultation that they can give them so that the patient's getting best value for money. But there's a line there, a commercial or operational line, if you like, that a judgment between getting as much information as you can to make the consultation effective, but not putting patients off from coming to see you because you've made that process so difficult or challenging. And so we really went through a process of thinking about where's the balance here? How do we get the information that we need to make sure that consultations and appointments are as effective as they should be, but not overwhelming the patient with requests for information that either put them off or made them think about going elsewhere. Because if you ring up 2 clinics and one clinic says, yeah, you can come in tomorrow, don't worry about it, we'll see you, and the other clinic says, well, can you fill in this 60-page questionnaire before you come in, there's a lot of people that will just choose to go to the clinic with no information just simply because it's easier and quicker. And particularly when you put that in the context of most IVF patients are between the ages of 25 and 45. And so that those people have grown up in a generation of technology and ease of access, not filling in lots of forms and ticking lots of boxes. So it's about mirroring that really and changing those demands. And that's a practical example of some of the things that we've done as an organization to make that access to patients informative to our staff so that it's meaningful and productive, but slick and easy from a patient's perspective so that we can attract as many of them as possible.
Fertility centers have unique and unmet business needs. Unify uses AI and machine learning to improve IVF conversion, growth, and patients' experience. Providers who counsel patients with the support of the Unify pre-IVF report see a 2 to 5 times increase in IVF conversion. That means if you make $10 million in IVF revenue today, you can make $3 million more with Unify. Unify provides AI white glove platform services to IVF centers, including business analytics, IVF live birth prediction modeling to support provider-patient counseling, and using AI and machine learning to support IVF pricing strategies that optimize clinical outcomes and profitability. Fertility centers can expect to see ROI from using Unify within 1 to 2 months. Unify's methods have been published in top peer-reviewed medical journals. HIPAA and GDPR compliant, Unify is being used by fertility specialists in the US, Canada, EU, and the UK. Download Unify's free IVF conversion and revenue calculator at unify.com/IVF patient retention. That's unify.com/IVF patient retention.
I want to talk about how those two things reconcile staff's needs and patients' needs. You also mentioned that you were talking to staff and finding out what their challenges were. What did they tell you their challenges were?
Most of the time it's challenges with the systems, and we've got our own in-house system that we've spent 25 years developing. But in IVF, as I'm sure you know, there is lots and lots of different systems out there, but none of them are amazing.
Referring to electronic medical records?
Correct. Yeah. And so, clinical staff want to do what they love doing, which is treating people clinically and talking to patients. And they don't want to spend hours in front of a computer and ticking boxes and moving pieces of paper around. And so it was really listening to them in terms of how can we make the system as slick and effective as possible to make their lives easier. So that's how we fulfilled the needs of the staff. And there wasn't really much of a conflict between the needs of the staff and the demands of the patient. There was the only thing I would say where there's a small conflict is our staff would typically want to have as much information as absolutely possible about the patient in advance. And we wanted, as I said, to put a bit of balance to that. But that's nothing more than, just communicating with staff, explaining to them the reasons for why we're making some of these changes, and then them seeing the benefits of those changes.
And so what about times where there is a bit of a conflict? And I can think of an example. If the patients who want evening hours for reasons that you mentioned, they're in the demographic, they're in the demographics of their working prime, and they would love to, in many cases, to have a 7 p.m. consultation. And then you have a call center team that says, yeah, right, Dave, I can barely get enough employees right now to staff my current team, and they're telling me they want more time off, and they're already asking me for a raise, and I'm at risk of losing these other two, and we've had this opening for 8 weeks. And so how do you reconcile those two?
I mean, one of the advantages of being a large group is that you can have more sophisticated processes in place. And I guess one of the things we're used to in the UK, and it will take us a little bit of time to establish this in the US, is we have centralized teams to do this and virtual teams, so they can work anywhere and have calls with patients from anywhere. And so you then fishing in a much wider pool of employees to be able to satisfy that need. And actually for some staff, working what would for some people be considered unsociable hours is perfectly fine. That's what they want to do. They want to work those hours. And so as long as you've got a right mix of people, you can do that. I mean, to be clear, out of hours, we tend to focus on just making sure the patients can contact us rather than having full-blown clinical consultations, because that would be more challenging. But we provide services to them out of hours just in terms of contacting and talking to us, which often is enough.
So you need a well-oiled human resources machine in order to be able to accomplish that, though, don't you?
That's right, yeah.
Have you ever read the book Traction by Gino Wickman or heard of the Entrepreneurial Operating System? You've probably seen some version of different accountability charts, but their version of the accountability chart is that you have the CEO on top, and then COO is what who they would typically refer to as visionary integrator, and then having 3 core functions of the business that they would call operations, which in our case you might have lab operations, clinical operations, you have sales and marketing, and then you have finance. And they often lump legal in with finance. Anything that has to do with compliance, they put with the finance side of the accountability chart, and they put human resources over there. And I'm not convinced that it goes over there. I don't know if it goes in operations. I don't know if it belongs as its 4th thing, and it's operations, sales and marketing, finance, and then human resources. How do you think that it relates into an operational system?
Well, specifically for human resources, I would argue that it's a sort of foundational layer that sits across those pieces, because you've got to get the culture of the business right. You've got to get the quality of the staffing right in all of those 3 functional support layers. And so HR needs to sit across that. I mean, from a technical reporting point of view, human resources reports into me directly. So I work with the group human resources director and literally tomorrow I've got a 3-hour session with her around succession planning and the quality of the senior management team, making sure that we're developing the senior management team. So I think in a people-led business such as healthcare, human resources can't be a module of finance, if you like, that's down there with reporting. That it needs to be high up the agenda with, in my opinion, direct access to me as CEO, because we employ 1,000 people, and our business is very much around people interactions with patients, whether that be virtual or face to face. It's all about interactions with patients, and so the quality of our staff is critical. So I would see it as being a foundational layer, really, sitting across those functions. I would also argue, by the way, that in a business such as ours, that sales and marketing plays second fiddle to customer services. And you've really got to have a really high performing we bucket that all together, sales, marketing, consumer services, all as one big department, because there's no good having a really hot marketing department and then having terrible customer service, because a lot of our business comes from reputation, word of mouth, repeat business, and that is much more effective than spending millions of dollars on marketing, pay-per-click adverts. It's so having that one view of the consumer journey, the consumer life cycle, is really important.
The customer service piece of sales and marketing is that which latches sales and marketing onto operations and makes it fluid. And the sales and marketing beyond that overlap piece should really be the activation of that piece. That it's the activation of that experience that they're able to achieve. On the HR side, you have to have a system for advancement. You got to have a system for retention. You have to have a system for recruitment. Otherwise, things can buckle, and then you can start to have a lot of challenges delivering to the patients. And then you can really start to have conflict between what the patients need and what the employees need. Did you find that balance harder in late, let's call it mid 2021 or early 2021, perhaps, to let's call it mid to late 2022 than any other time in your career, or was that just me?
I think post-COVID, we've all had significant challenges, right? And I think we as a business have gone from a predominantly work in the clinic culture, head office function based in one city, everybody turning up to work, to, other than the clinical staff, obviously, having a lot of people working from home, a lot of people, and we're seeing now some of that coming back. I literally had a conversation with a staff member this morning about feeling disconnected from the business and feeling quite upset about that. So we have a big meeting on Monday with the senior team where one of the topics is how do we keep the efficiency of the working from home model, because it's undoubtedly more efficient, but make sure we don't lose our identity and people's connection to care, because we believe ourselves to be the care family, and it's really difficult to maintain that when people are working from home as much as they are. So I think with staff retention, culture, it is more difficult now, undoubtedly, because of some of the dynamics that have been created in the post-pandemic employment market.
So you might be the perfect person to ask, having an operations background and a finance background, and being from the United Kingdom where they use the word redundancy in the labor force. Because one thing that I've been considering a lot, because I really struggled with meeting client needs without driving my team crazy in late 2021 and 2022 when it was so hard to recruit. And I've since completely revamped my human resources system and now really have a system. And I tell people that I think that I'm a yellow belt at it right now. And then when I write a black belt, I will write when I am a black belt at it, I will write a New York Times bestseller. You'll see it in the Heathrow airport, and you'll pick it up off the news rack, and or whatever the digital version of that in the metaverse is. And I really believe that I will be able to knock it out of the park. But right now I'm a yellow belt, and one of the two of the opposing forces that I'm really trying to master are that with efficiency and that with redundancy. And I'll lay the premise that I believe that recruitment is a retention strategy as well, for two reasons. The first is it's really hard to hold people accountable to their seat if you're asking them to do more and more things outside of their seat without that which they need in order to be able to accomplish it. So you have to have more people coming in, or at least a replacement level to come in, so that you can maintain that level of accountability. And second is that if you get people in that are not fit with the culture, or they are not able to achieve their outcomes, and you're not able to replace them, then that can turn into a cancerous environment real fast. And they can why not take a vote of no confidence, because if the great people are feeling stressed out and not getting the resources they need, then see ya. So that premise is that recruitment is a necessary strategy for retention. And I see redundancy as being somewhat necessary in order to make sure that we constantly have people coming in, so that people can be accountable for their seats, they can be supported, and that we don't have the stress of it being several months of people having to bear a burden that they shouldn't have, and then all of the cultural issues that come from that. And then I've been thinking about this also a lot, because we say layoffs in the United States, but when people are let go in the UK, it's often let go to redundancy. Is that so? You coming from finance, where in a perfect world, we don't want any of that redundancy, versus operations, where you have to consider the needs. What's redundancy's place in all of that?
Unpicking that question, I would say there's two elements to it. One is performance management and one is redundancy. And I think the lack of performance management is really corrosive in an organization. And that's holding people to account for their performance. And if you don't do that, and if you allow poor performance to prevail, then it's really corrosive to good performers. And it's really demotivating to those people that are doing a good job, when they see people doing a bad job not being held to account. It's a very corrosive part of the business, and it can be very demotivating. And so I think performance management is critical in any business, and particularly in a people-led business such as ourselves, and a decentralized business as well. So having really good performance management systems and processes in place is critical when you're running multiple sites, because you can't manage that from the center. You have to delegate that down to the managers, and you have to provide them with good tools, good systems, and good training to be able to know how to do performance management. So we follow the kind of bell curve of performance management, in that we would anticipate that in any given clinic, any given department, you should have some people that are poor performing, some people that are exceptional, and the majority of people in the middle, and really trying to educate our staff on how to use those tools. So I would say performance management is a main part of what you're discussing. I think redundancy comes in different, or layoffs come in different packages. So we have very rarely resorted to redundancy, and even during COVID, we didn't really do much of it. But it is, from time to time, unfortunately, necessary. And I would say it's necessary really in two main ways. One is the roles just change. So, the world moves on, and you no longer need people in a certain role, and that role becomes redundant, and it needs to progress, because you now need people that are doing chatbots rather than answering phone calls. That kind of evolution of the business. And if you don't evolve with that, then you might be doing somebody a favor in the very short term, but the business will suffer in the medium to long term. And so you've got to do what's right by the business, which ultimately is right by the staff as well. And the only other period of redundancy that should be considered is in a downturn of trading. But, touch wood, IVF is a pretty resilient sector to be in, and there's not that much need for redundancies as a result of downturns in trading. But, never say never.
How about redundancy in the form of overlapping roles, or perhaps additional roles that you might not exactly need that person, but I've coming to see that as a necessity for performance management. So one of the ways that we have been onboarding our new folks, and even with the team that's been here for a little bit, we've created an outcome hub so that each person has their own outcome hub. And so there's an outcome hub for your seat. Okay, David, here's the 3 to 7 main things that you're responsible for. And then we have rocks which are like quarterly priorities, or priorities that take several weeks to accomplish. And each of them are associated with one of those seat outcomes. And so when you start, we go over them in detail. I'm as explicit as I can be on what the outcomes are. And And then I delineate what we have and what we don't have for you to be able to achieve the outcomes. And we do that from the very beginning. And so it's okay, David, your job is to grow the LinkedIn audience by 10% by the end of second quarter. Here's what I have for you. We have these former campaigns. I have this designer on your team. Here's what I don't have for you. I don't have A, B, and C. And then we agree. And so what I've found is that I need to have those things in place, which are very often people that can be moved from one seat to another if need be, or if one of those things if we lose one of those people, that we can replace them very quickly so that I can hold my people accountable. And the further I get into this, the more I see the two as intertwined. So if redundancy is something that often means layoffs, what's the necessity of overlap that might not make financial sense on the immediate line in the spreadsheet, but that is absolutely necessary for keeping the operational machine going?
I think overlap in the way that you describe it comes in two ways for me. I think you've got succession planning, and when you've got some really great people at one level, and you can see a role for them in a higher level where they can add more impact into the organization, you've got to go with that. And you can't be selfish insofar as, or cautious insofar as, well, they're doing a great job, let's leave them there and bring somebody in above, because it demotivates them. And also the person you bring in above might not be as good as they would have been. And so there's a real need when you get that situation, when you see these rising stars, when you see this amazing talent, that you've really got to let them shine. And the only way you can really do that is to have a bit of overlap and bring in some resource at the lower level to work alongside them, to then enable them to elevate up into the higher position. So I would say there's definitely a need for overlap as I see it in that situation. And the prize then is that you've got talent from within growing up in the organization. And that's one of the things that we've really proud of, and we've done in many situations. Our current director of integration was our previous IT manager, who's been with us for 25 years, and we've moved him into a new role. But to enable that to happen, we brought two people in to succeed him in his IT role. We had a bit of overlap. It hit the bottom of the line for the P&L for a while, but we're now reaping the rewards because our integration director has got such a wide variety of experiences that when he helps us with integrations, he can help with all sorts of challenges. And he's a great guy as well. And we've invested in him, and he's moving on. So I think you, in business generally, but specifically in your point here, you've got to take a midterm view on these things. And the way to convince investors to take that view is to demonstrate to them that you're making the short-term quick wins, you're taking them, and you allow them to use some of those short-term quick wins to invest in the medium to long-term growth plans, because they want them too, but they'd soon lose interest if that's all you were talking to them about, and you'd be ignoring the current P&L. Let's worry about tomorrow. They would not like that. But if you can demonstrate to them some good performance, some quick wins, you buy your freedom to invest in the medium to long term. And overlap, as you call it, or succession planning is a critical part of that.
Well, that succession plan, as you described it, makes filling senior positions a lot easier for two reasons, right? One is that if you're continually bringing junior people in, if you're continually bringing lower level positions in, some of them are going to grow to be great senior leaders. So you have that pool to begin with. But then secondly, if for those times when you don't have a senior leader to take from that pool right away, you still have that team in place that is much more attractive to recruit a senior leader if you have those folks. So it's a lot easier to recruit that talent for two reasons. You talked about it can hit the P&L for a little bit, and you need to make an argument to the investors that it's beneficial for the midterm. So what are a couple examples where you've done that, and you'd say, hey, I've sat on your seat on the finance side, and I know that it's going to be it's not going to look great on the P&L for the next 4 months, but in 2 years, it's going to be amazing. And what are a couple of examples of that? And what data did you use to make your side of the argument?
That's a good question. The best example I've got of that is when we centralized our call handling and inpatient handling. So this is patients that are currently patients of ours, where they would previously ring or contact each individual clinic for updates on test results or whatever it might be that they were ringing for, and we were providing an okay service, but we knew it could be better. And the reason for that is the clinics, it's the laws of small numbers, right? So each clinic might only have 4 or 5 people that are dealing with that kind of request. And small teams have vulnerabilities. They have vulnerabilities of succession, sickness, you name it, poor performance. They are exposed to small fluctuations that lead to a big impact on their patient service. So we decided that, look, it'd be a lot easier if we centralised this, because then 1 or 2 people being off sick, or it can be covered quite easily by a much bigger, broader central team, and we can share best practice better, etc., etc., etc. So we decided to make that change. We decided to make that change, but the way to do it in the most impactful, least risky, patient-friendly way was to actually build 80% of that central team before letting any of the local team go or moving them into the position. And that obviously came with quite a significant cost, because you're building up a team before you've replaced the other team, and then you're running them in parallel, and then you're making the final changes. And that was really about articulating the benefits to the board and saying, look, the ultimate benefits here are this, and it's going to cost us this much. And these guys are very smart people, and if you treat it in the language that they understand, which is, I need to invest this much, this is my investment, and this is my return, then they can visualize that, and they just want to then know, when's it going to happen, how do we measure it, what are the milestones, and that's a very easy business decision to make. And I would argue that it's all very patient friendly as well, because not only are you ensuring that the experience whilst you're building the team is a good one, but ultimately we did this not to save money. It was done really to provide a better quality of service to the patient at the end of the day.
My second New York Times bestseller is going to be about pre-selling and to what scope pre-selling should fit into, what constraints pre-selling should fit into, for the reasons that you're talking about. My first business, Fertility Bridge, is a client services firm, and it was very much we're selling, delivering, and it's not like a crazy huge business, so we're able to do it. But gosh, it's a lot to do, to sell, then deliver. And now building Inside Reproductive Health into a trade media company, I can take my time more, and I'm building out a lot more of the delivery capacity ahead of time in ways that I wouldn't have in years prior, where I would have tried to had that immediately funded. And for a couple reasons, it established, I feel that the concept is proven in other ways. I've built up that cash reserve to do it. So I'm the board that you're talking to. I'm the investors that you're talking to in this case, because it's self-funded. But I am really seeing the value of saying, you know what, we'll just sell a couple advertisers at a time here. We'll continue to build this system, and there's no rush I shouldn't say there's no rush. We're moving quickly, but it isn't like we're having to fulfill something immediately. We're really building a delivery capacity in much greater advance than we would have in the past. And that's what you're describing, but it's very antithetical to, if you remember, oh gosh, what's the Eric Ries, the author of The Lean Startup, and that whole school of thought of don't ever create anything until the concept is totally proven. And so, do you? At what point do you feel it's sufficient to say, okay, the concept is proven, but I really need to build out the delivery capacity before I start selling it, or before I start having paying customers go through it?
I think it really depends on what it is that we're talking about. In the case of what I'm describing, we were able to trial the service in one clinic first for a 6-week period to really hone in on the way it was going to work, what the pain points were, what the SOPs should be, and then launch it multiple clinics wide. So I think having the concept is going to be a combination of data, intuition, and feedback, and then then for me, you run a trial period of whatever that might be, a low touch trial period. It could be that if it's a clinical service, you'd have heard Alison talk about Care Maps AI when she was on. If it's a clinical service that you're launching, then maybe you do it for free for the first month just to get feedback and you understand how it's working. And then when it's working, then you start charging for it. It might be, in the case of my example, a patient services change where you do it in a small way to start with, just to get that feedback, get the process perfected, and maybe also to prove some of the business case, because it might be that the business case said that we're expecting 50% of people to do this, and if it's only 20%, then maybe it doesn't work anymore. And so you get that feedback, you prove or disprove some of those myths as part of it, and then you go with a bigger rollout. So for me, it's all about limited trial periods to really then perfect what you're doing, and that becomes even more important the bigger you get, because the bigger you get, what would be a challenge in one clinic becomes critical in multi-site operations. And if we were to roll out a new system or a new process across 20 clinics without really understanding the impact of that, we could have a big problem.
I want to let you conclude with the thoughts you'd like to conclude on, but before I do that, I want to tie back into the theme that I opened with of a new generation of CEOs, in many cases taking over for the previous generation who had founded their groups. And that's happening everywhere, isn't it? It's happening in the UK, it's in India, it's in the United States, it's probably in most of the countries of the world. And so I was thinking of Gilbert Gottfried. You remember the comedian Gilbert Gottfried with the funny voice from Saturday Night Live? But he was on the second generation of Saturday Night Live, and he said they were the cast right after the original cast of Saturday Night Live, and everyone hated them because they weren't used to Saturday Night Live cast changing at that point. It would be like if somebody just replaced the cast of your favorite TV show with a new one, that people weren't used to it, and so they got fired within like a year or two, and he said nobody liked them, and then the next cast was able to really take off and become the classics of Eddie Murphy and that whole cast of the early 80s that's probably even more famous than the first one now. And so you're the third CEO. Are you the Eddie Murphy, and what's it like to be the Eddie Murphy after what's it like to try to resume a legacy, I guess, in leadership?
Look, I always think of myself as the custodian of the CARE brand, and I'm temporarily carrying the brand to the next stage. And I'm always incredibly respectful and in awe, really, of the bravery and the foresight of my founders. You know, they did an amazing job, and I kind of carrying on that legacy. But I think the challenges are different than what they were for them when they founded the clinic. And certainly the challenges of running a private equity group over 3 countries with 20 clinics is very different to founding a one clinic in a new city. And so I think it's different skills for different eras and different periods. And, you know, there's some uncomfortable truths that are, it's really difficult when you've got 1,000 people to know everybody's name. When you're the founding doctor of one or two clinics, you will know everybody's name. You probably even know what their kids' names are. And so the environment is different, and there's no getting away from that. But then it's about changing some of the things for the better as well. So one of the things that we are very focused on, you talked about it earlier, is HR and making sure that we share in some of these benefits of being a bigger organisation with our staff. And then I think people do accept the cultural change that's going on. They understand it, and it's about remaining visible, despite the fact that we're 20 clinics, 1,000 employees. Absolutely trying to remain visible so that you are accepted within the organisation as not just somebody that's running the business that no one ever sees, but actually they know me as Dave. And that's really important to me.
What level of temporary is appropriate? The temporary custodian and someone that is brought on as an executive of whoever the CEO of Mattel is now, wasn't the CEO 20 years ago and likely won't be the CEO 20 years from now, and that's fine. Then there is a tenure that seems to be just too short to make any kind of meaningful difference. So you see lots of CEOs, and I look on LinkedIn, it's like, oh, they're the CEO there for 10 months. What are they, like a Gen Z intern? How are they the CEO for 10 months and then the CEO for 11 months over there, or 2 years? And one of the concerns that people have with private equity, with publicly traded companies, with venture capital in the field, is that there's churn and there's the stripping of assets and selling it at a higher price and then being gone. And 5 years, you've been almost 5 years at CARE, and that seems like a pretty good tenure. What level of temporary is appropriate?
5 years and 3 private equity firms. So I've survived that long. I think for me that in any job you go in, and I think most people would feel that within 6 months of starting a new job, you've got a good idea of where you can add value and what you can do and how you can do that. And I've kind of been through 2 phases of that, I would say. I came in as finance director. I had some really good ideas about how I can improve things, and I did that within the first 18 months. And then as CEO, I've kind of been through that period as well, where it was like, right, these are the top 5 things that I want to achieve as part of being the CEO for CARE. And then I'd say I've been through that, and now my period that I'm going through with CARE now is we've got a really, really good UK business, and how can I establish that on the international stage? And that has given me growth and drive and enthusiasm to see how can we take what is a one country really successful model and see how that adapts into other countries and other successes. And then one of my other big passions is building the team up around me. And to answer your question directly, I don't think there is a prescribed time, but I for myself would feel that when I've achieved that international growth and I've really got a strong team around me, then it would be right and proper for somebody else to have a go, really, because I think no matter how good you are, there is a period where you've done the things that you wanted to achieve and you maybe get a bit stale. And I think, I don't know what that length of time is. I hope it's not 6 years, but
3 years after that, that's when you're going to retire.
We'll see.
Dave, our audience is fertility practice owners, physicians, and executives increasingly from around the world. How would you like to conclude on the topics that we discussed today?
Yeah, well, thanks for giving me the opportunity, and hopefully people have listened this far, so thanks for listening. But no, the way I'd like to conclude is that the US is a very exciting market, and that's why there's a lot of private equity interest in the US. I think there's some really good players out there and some really good firms, but they have all got their differences. And what I would say is it's really, I've worked on nearly 10 acquisitions of clinics now, talking to doctors, spending time at their houses, spending time getting to know them and really understanding them. And every single deal is different and every needs of people are different. And so it does worry me occasionally in the US about how many sales are being really process-driven sales, because for me, I would say that if you're a doctor, you should really think about what it is that you want, or an owner, I should say, what it is that you want. And if that's the biggest check, that's fine. That's totally acceptable. But in my experience, that's not always the case.
Are process-driven sales not happening to that degree in the UK and Europe, in your view?
No.
What do you think are the main differences?
It depends on the process, first and foremost. But generally, in a process, you don't get a very tailored deal. It's a very off-the-shelf deal. And in my experience, you often have clinics with 3 or 4 owners, and each one of those owners might have different desires for the future. Some might want to retire straight away. Some might want to be with a business for 10 years. Some people want to do research and development. Some people want to be just business people. And it's really difficult for a buyer to be able to present an offer and a structure that's really tailored to those individual people's needs and desires when you're kind of held off at a distance with an advisor in the middle, not necessarily with those same motivations. So it's horses for courses, as we would say in the UK, and you've just got to think through what it is that you want from a sale. And we pride ourselves really, and I personally pride myself on really trying to understand what it is that the sellers want, and then try and come up with a structure and a way of working that satisfies those needs.
Why do you suspect that type of process sale is more common in the US than it is in the UK and Europe?
I think the pace of change in the US is faster. We've been going through a consolidation process in the UK for over 10 years. I did my first acquisition in the UK back in when I joined 2014, and we're still doing them now. So it's been a much slower process in the UK, whereas the pace of change in the States seems to be a lot faster. And I think maybe clinics are getting not forced, but are feeling the pressure to sell and move on, and that maybe leads them to a state where they are going with these very fast 6-week advisor-led processes, which, like I say, it's horses for courses. That might suit some people, but this is a
advisor being the person that represents the sell side.
Yes.
And so normally that the Steelman argument for that would be you need somebody to advocate for you. And so what's the drawback?
No, it's not saying that you don't need sell-side advice. It's the type of sale. So sell-side advice is critical, and these advisors do an amazing job. But it's when it's a very fast 6-week process and highest bid wins kind of thing. It might be perfect for some sellers, but in my experience, what you'll find is that there's sometimes a misalignment after the sale because you didn't really get a chance to talk about what it is that you want and what it is that they want. And how can you? It was a very quick process. And so this is quite often somebody's lifetime's work, right? They spent 20 years building this business. Why not spend a little bit longer just getting to know who it is that you're going to be partnering with after the deal would be my main advice really to people. And then, as I say, my passion and CARE's passion, having done lots and lots of these acquisitions over the years, is to really understand what it is that people want, and then to try and tailor that deal to suit them.
Dave Burford, CEO of CARE Fertility, thank you very much for coming on the Inside Reproductive Health podcast.
Thank you very much for having me.
This episode was brought to you by Unify. Download Unify's free IVF conversion and revenue calculator at unify.com/IVF patient retention. Today's advertiser helped make the production and delivery of this episode possible for free to you. But the themes expressed by the guests do not necessarily reflect the views of Inside Reproductive Health nor of the advertiser. The advertiser does not have editorial control over the content of this episode, and the guest's appearance is not an endorsement of the advertiser. You've been listening to the Inside Reproductive Health podcast with Griffin Jones. If you are ready to take action to make sure that your practice